Hello everyone, good day. I'm Shania May Horton. Together with my groupmates, we are the Group 7, and we're going to discuss the Chapter 20 and Chapter 21, which are the wasting asset and investment property. But we will tackle first the wasting asset. So, unsa man din yung wasting asset? Wasting asset are material objects of economic value and utility to man produced by nature. So, ang wasting asset is na ay value sa ato, kay ato man si ginagamit. Unlike sa PPE na it comes from humans or humans agahimo, the wasting asset is it comes from the nature. Wasting asset can be physically consumed or it is irreplaceable. So, a cost sa wasting asset kay naay four ka component, which are the acquisition cost, the exploration cost, the development cost, and the estimated restoration cost. If these four will be added, then you will come up to the cost of wasting asset. And wasting asset can be initially measured at cost. So, mauna atong initial na understanding sa wasting asset. Now, we will go to directly to illustration for more deeper understanding and modiretso ta sa depletion. Unsa man po din yung depletion nga nang ma-relate man siya sa wasting asset. Ang depletion is the removal or extraction or exhaustion of natural resources. Sa depletion na ay gikuha or nahurot na ang resources from the word itself na depletion or deplete. Sa depletion, ang gikuha is natural resources, of course. For example, is mga oil, ingana. So, it is a systematic allocation, and diri as a depletion, ag asset is called wasting asset. Mao si diyang connected si ag depletion sa wasting asset. Now we have the problem example of depletion. So, during 2021, Charisme Company acquired property with mineral deposit of 15 million. The property had a residual value of 500,000. However, Charisme is legally required to restore the property to its original condition at a discounted amount of 2 million. Geologists estimated that 2 million tons are to be extracted. Tons extracted total 250,000 in 2021. And the required here is for number 1, what is the depletion to be recognized for 2021, and 2, prepare all necessary entries in 2021. And for us to compute the depletion, we have the formula of depletion equals total cost of the wasting asset minus estimated residual value over units estimated to be extracted multiplied by units extracted during the year. Before that, we will get first the total cost of the wasting asset by adding the acquisition cost plus exploration cost plus intangible development cost plus estimated restoration cost. Okay, atong i-compute og una ang total cost of the wasting asset. Since sa problem, wa man tay exploration cost og intangible development cost, maong ag ato ra lamang gamiton para makakuha total cost of the wasting asset kay acquisition cost og estimated restoration cost. So we have sa problem, we have the acquisition cost of 15 million plus the estimated restoration cost of 2 million, and the atong total cost of the wasting asset is 17 million. And moderation na naman po ta sa atong depletion na di ba naanay si Jai formula sa depletion is total cost of the wasting asset minus estimated residual value. Ato sa ning kuhaog una. Maunang ag atong total cost of the wasting asset na 17 million, ato na lang pong iles sa atong residual value na 500,000. Maunang natay depletion cost na 16 million 500,000. Depletable cost di ay. So now, mauna ni compute na to sa depletion charges. Diba to na magi-compute ang kinaunhan kanina, maunang naanatay 16,500,000. And then, ag atong units estimated to be extracted is 2 million. Imo po nang i-multiply sa 250,000 na plants extracted in the year 2021 or units extracted during the year, maunang 250,000. So, we will come up to 2,062,500. Maunag atong depletion. Now, mudiri na ta sa journal entries. Para ma-record na to, ang acquisition of wasting asset, we will debit the mineral deposit of 15 million and then credit na to ang cash na 15 million. That is to record acquisition of wasting asset. Para pod ma-record ang liability from estimated restoration cost, ato pong i-debit ang mineral deposit 2 million and then credit the estimated restoration of 2 million. And to record the depletion charge in 2021, we will have the depletion and 2,062,500, that is debit, and credit, the accumulated depletion of 2,062,500. So nga naman na, because depletion is expense yeah, because mauna yung nawa sa katong wasting asset. And accumulated depletion po, just like sa depreciation, depletion po, just like sa depreciation, nara ba ni accumulated depreciation? No. Nga naman po, kay related man gud po siya sa asset. Sa lain lamang klase na asset, which is the wasting asset. So that's all for the depletion. So, ari na po tas change in the unit estimated to be extracted and additional development cost. So, og na ako no'y change in the unit estimated to be extracted or ag company kay mag-incur og additional cost, ag kani kay ma-regard ni siya as change in accounting estimate na dapat ma-handle siya currently and prospectively. Maong ag company kay need mag-compute sa new depletion rate per unit using this formula. So, na po yung formula gamiton para ma-compute ang new depletion rate per unit. So, new depletion rate per unit is equal to remaining depletable cost over remaining revised estimate of the productive output. So, na po yung formula sa depletion, which is depletion is equal to depletion rate over the unit multiplied by units of extracted during the year. So for more understanding, we have now the illustration. So during 2020, Noble Company purchased property with ore deposit for 10 million. The property had a residual value of 1 million. However, Noble is legally required to restore the property to its original condition at a discounted amount of 500,000. So in 2020, Noble spent 800,000 in development cost. In 2021, an amount of 900,000 was spent for additional development on the mine. So the tonnage mine and estimated remaining tons for year 2020 to 2021 are as follows. For the year 2020, we have the tons extracted of 500,000 and estimated tons remaining of 1,500,000. And for the year 2021, we have the tons extracted of 800,000 and the estimated tons remaining of 1,700,000. And what is required here is for us to compute the depletion to be recognized for 2020 and 2021. So, aray na ta sa solution. Di ba kanam mo sa atong last na illustration, inikuha na to sa depletion is ato sa kuha og una ag total cost of the wasting asset. So, inikuha na to sa total cost of the wasting asset, ato lang i-add ang tanang components sa sa cost of the wasting asset. Maunang acquisition cost plus exploration cost plus eligible development cost plus estimated restoration cost. And ug unsay naa sa problem, ug unsay available, mauna ang imong i-add tanan. So kay naa man tay acquisition cost atong i-add na 10 million, naa po tay estimated restoration cost na 500,000 ug development cost na 800,000. So natay total cost of the wasting asset na 11,300,000. Ug di ba kay numdum pa mo sa atong formula sa depletion na ug na natay total cost of the wasting asset atong minus sa estimated residual value. Mao nang atong pong iles ag residual value na 1 million para makuha natong depletable cost sa 2020 na 10,300,000. So inikuha pod nato sa new depletion rate. Naa na po tay formula nga na para sa ang giingon ganina na new depletion rate is equal to remaining depletable cost over the remaining revised estimate of the productive unit. So, kay naa naman tay depletable cost, ato namang nakuha ganina na sa depletable cost sa 2020 na 10,300,000. Ato na naman siyang i-divide sa units estimated to be extracted na 2 million. Asa po ni nato gikan? Mauning 500,000 o 1.5 million sa year 2020 na tons extracted 500,000 o estimated tons remaining na 1.5 million. So ato ning i-divide ning duha, maong natay depletion per unit na 5.15. So, inipod na to kuha sa depletion na po tayo formula. So, depletion equals na naman tayo depletion rate, no? Ato namang i-times sa units of extracted during the year. So, depletion rate per unit multiplied by units of extracted during the year. So, 5.15 na depletion per unit atong i-multiply sa tons extracted na 500,000. So, for the year 2020, na atay depletion na 2,575,000. So, nakuha na natong depletion sa 2020. Alay na po tas 2021. So, sa year 2021 pod, atong gamiton ang depletable cost sa 2020 na 10,300,000. Unsa na ato na sidyang iles accumulated depletion na 2,575,000. So, naatay total na 7,725,000. Unsa di ba kay sa atong formula sa total cost of wasting asset ug unsa na naa sa component ato sa cost sa wasting asset ato jud nang i-add. So, kay naman tay development cost sa 2021 ato nang i-add ng 900,000. So, for the year 2021, natay depletable cost na 8,625,000. Og ato na pud nang i-divide. So, balik na po ta sa formula ingan ni new depletion rate per unit para makuha na tong new depletion rate per unit. Ato na po na silang i-divide. So, 8,625,000 divided by 2,500,000. Asa po taaning gikan ning 2,500,000? Gikan po na siya sa year 2021 na tons extracted na 800,000 og estimated tons remaining na 1,700,000. So natay 2.5 million and units estimated to be extracted. So, inig-divide na to 8,625,000 divided by 2,500,000, natay depletion per unit na 3.45. So, para makuha na tong depletion, ato na po na siyang i-multiply sa tons extracted sa 2021 na 800,000. So, for the year 2021, inig ato na ning i-multiply 3.45 multiplied by 800,000, natay depletion na 2,760,000. So, that is our depletion for the year 2021. So moving on, aray na po tas change in estimate restoration cost. So the problem is, on January 2, 2020, Restorer Company purchased property with or deposit for 20 million. The property had a residual value of 1 million. However, Restorer is required to restore the property to its original condition at an estimated cost of 2.5 million on December 31, 2023. So the appropriate discount rate is 10%. The tonnage mined and estimated remaining tons for year 2020 and 2021 are as follows. So for the year 2020, the tons extracted are 500,000 and estimated tons remaining is 1,500,000. And for the year 2021, the tons extracted is 800,000 and the estimated tons remaining is 1,700,000. Required to compute the following and to prepare the related journal entry. So for the requirement number 1, we should compute the cost of the wasting asset. The requirement number 2 is to compute the depletion expense in 2020. For requirement number 3 is to compute the interest expense in the 2020. And for the requirement number 4, we have the case here, which is case number 1. Assuming at the end of 2020, the restoration cost to be incurred on December 31, 2020 is now estimated to be 2,300,000. So we should compute for the interest expense in 2021 and the depletion expense in 2021. So in case number 2, assuming at the end of 2020, the restoration cost to be incurred on December 31, 2023 is now estimated to be 2,600,000. So we should compute for the interest expense in 2021 and the depletion expense in 2021. For the requirement number 1, to compute the cost of the wasting asset, sa ato nang gibalik-balik kanina, ato lang ipang-add tanang components sa cost of the wasting asset. So, naman tayo acquisition cost na 20 million, then estimated restoration cost. So, pagkuha sa estimated restoration cost, ato lang i-multiply ang 2,500,000 sa 0.683. So, we have 1,707,500. So, our total cost is 21,707,500. Journal entry na to nga na mag-debit rata sa wasting asset kay di ba agatong i-compute kay total cost of the wasting asset man to. So debit wasting asset and then i-credit na to cash na 20 million mo nagkatong acquisition cost sa pagpalit og asset retirement obligation or restoration cost na ato pong gi-compute kanina na 1,707,500. So sa requirement number 2, sa pagkuha nato sa depletion expense in 2020, mogamit og gyapon ta sa atong formula na atong gigamit sa una katong atong last na problem. Mahinumduman naman tingali mao nang natay total cost na 21,707,500 matong atong gi-compute kanina sa first na requirement. So di ba kay namdum mo sa inig compute sa depletion sa numerator dapat ato nang i-less sa residual value na 1 million. Ang total cost sa wasting asset i-less na nato sa residual value. So natay depletable cost sa 2020 na 20,707,500. So para nato makuha ang depletion rate per unit, ato na sidyang i-divide. So units estimated to be extracted na 500k plus 1.5 m. Asa po nagikan? Mauna gikan sa 2020 na tons extracted na 500,000 o 2020 na estimated tons remaining na 1,500,000 a total of 2 million. So, i-divide na itong depletable cost na itong na-compute na 20,707,500 and divided by 2 million. So, we have a depletion rate of 10,035,000. So, in cost depletion for the 2020, ato na po siyang i-multiply sa tons extracted sa year 2020 na 500,000. So, 500,000 times 10.35, we have the depletion in 2020 of 5,175,000. Journal entry na to pod agani man kung depletion kay mura ra pud ni si just depreciation na og nay depreciation na apoy accumulated depreciation kay lagi asset man pud ni siya pero lahi siya na kind of asset kay wasting asset man. So ini journal entry na to sa depletion mo debit ra pud tag depletion 5,175,000 and of course accumulated depletion pod na credit na 5,175,000. So, sa requirement number 3 po, dagato nang i-compute is ag interest expense in 2020. So, present value of estimated restoration cost na 1,707,500 ato na gikan na sa atong gi-compute sa requirement number 1 sa katong estimated restoration cost na 2,500,000 multiplied by 0.683 mao nang natay 1,707,500. So kay ato pod na sidyang i-multiply sa discount rate na 10% na given na sa problem. So 1,707,500 multiplied by the discount rate of 10%. So ang atong interest expense for the year 2020 is 170,750. Ang journal entry ana is ato lang i-debit ang interest expense og mo credit tag asset retirement obligation or restoration cost na 170,750. So, ang requirement number 4 is naa sa joy case. Ato nang i-assume na at the end of 2020, ang restoration cost to be incurred in December 31, 2020 is estimated to be 2,300,000. So, atong i-compute ag A, interest expense in 2021 and B, depletion expense in 2020. So, requirement number 4A, ato nang i-compute ag interest expense. So, the present value of initial estimated restoration cost at December 31, 2020 is 1,878,250. 1,878,250 og asa ni si Jagikan ang kaning 1,707,500 mo ani sa requirement number 1 sa katong estimated restoration cost ang kani pod 170,750 mao pod ni sa interest expense. So duha na mas naka present value sa estimated restoration cost kana silang duha at December 31 ato nang i-add para natay makuha na 1,878,250. So ato pod siyang i-less sa present value of revised estimate kay di ba nato revised estimate na 2,300,000. So inikuha na to ato lang i-multiply at 2,300,000 multiplied by 7,7,513. So naatay present value of revised estimate na 1,727,990. So kuan na to nga na is decreased in estimated restoration cost na 150,260. So, ining journal entry na to nga na sa requirement number 4A, ato rang i-debit ag asset retirement obligation or ag restoration cost na 150,260 og atong i-credit ag wasting asset na 150,260. So, ini-compute na to sa depletion just like sa atong gibuhat sa una. Kay na naman tayo total depletable cost sa 2020 na 20,707,500 ato ra sidyang iles sa atong accumulated depletion pod na 5,175,000. Asa pod na dapitan ng 5,175,000? Naana siya sa requirement number 2. So we have a total of 15,532,500. So ato po na sidyang ila sa decrease in estimated restoration cost na 150,260. So naanatay total debitable cost sa 2021 na 15,382,240. So para makuha nato atong depletion per unit, di ba atong i-add sag una ang atong tons extracted og estimated tons remaining na 800K o 1.7 million. So naatay 2,500,000. Then ato na silang i-divide. So naatay 6.15 na depletion per unit. So inikuha na to sa depletion, ato na silang i-multiply sa tons extracted sa 2021 na 800,000. Now we have the total depletion for the year 2021 of 4,920,000. Ora, 4,920,000. So now, ari na po tas requirement number 4B. Ang kinauna na itong buhaton is atong og revised present value of estimated restoration cost sa year sa date na December 31, 2020. So asa tayo nga ning 1,727,920. Gikan ni sa atong gi-compute sa requirement number 4 na present value of the revised estimate na 2,300,000 atong gi-multiply sa 7,513. So naatay 1,727,990. Atong i-multiply sa discount rate ng 10% kay given naman ng 10%. So we have the interest expense of 172,799. So in journal entry nga na parehara ganina na mo debit tag interest expense o mo credit tag restoration cost or asset retirement obligation. 172,799 debit interest expense and 172,799 credit restoration cost. Now, so requirement number 5, na naputay case number 2. Ato na po nung i-assume na at the end of 2020, ang restoration cost na ma-incur di ka December 31, 2023 is estimated to be 2,600,000 na. So, ato i-compute ang interest expense sa 2021 o depletion expense sa 2021. Now, manit atong first na buhaton sa requirement number 5, atong kwaon ang present value of estimated restoration cost sa ika-December 31, 2020. So, 1,707,500 plus 170,750 a total of 1,878,250. Asa patagi kanina ni kabantay mo na same ra ni si sa requirement number 4. Agane na si sa requirement number 2 o kanina asa requirement ay di ay ba. Requirement number requirement number 1 di ay requirement number 1 o requirement number 3. Nani si just requirement number 1 at kanina sa requirement number 3. Same ra nila to pag-compute sa requirement number 4. So, atong i-less ang present value of the revised estimate kay di ba ato nang gi-assume na 2,600,000. So, 2,600,000 multiplied by 0.7 1,530 na atay 1,953,380. So our increase in estimated restoration cost is 75,130. When journal entry na to, mo debit ra tag wasting asset na 75,130 and then credit ta og asset restoration obligation or restoration cost na 75,130. So, ato na i-compute ang depletion sa case number 5. So, total depletion cost in 2020 is 20,707,500. So, ano 20 million naman laman na. Di, imbis 21, di ba pag-compute na to sa kuan is 21 na. Na 20 million na kay ato manggi minusan og 1 million. Atong na minus ag 1 million na depletable na residual value. So, naatay 20,707,500. So, naapotay accumulated depletion na 5,175,000 sa mauna sa requirement number 2 na nato gi-computing na to kaning 5,175,000. So, naatay total na 15,532,500. So, di ba ato sa i-increase ang estimated i-add ag estimated restoration cost ini-compute sa depletion. So atong i-add ag 75,130 sa 2020 na 2021 natay depletable cost, 2021 natay depletable cost na 15,607,630. So inikuha na pod nato sa depletion per unit ato sang i-add og una ag tons extracted og estimated tons remaining na 800k og 1.7 m. So nata units estimated to be extracted na 2.5 million. Atong i-divide ag 15,607,630 divided by 2,500,000 then naatay depletion per unit na 6.24. So para makuha na to depletion sa 2021 ato sidyang i-multiply sa tons extracted sa 2021. So naani sa formula ha sa kato atong gikuan pingato-ato rang gisunod. So tons extracted na 800,000 multiplied by depletion per unit na 6.24 natay total depletion sa 2021 na 4,992,000. So in a journal entry just like sa ang ingon ganina na parihara na depreciation na og naay accumulated depreciation na apoy accumulated depletion. So depletion of 4,992,000 debit, credit ag accumulated depletion na 4,992,000. So lastly, parihara sa atong gihimo ganina requirement number 5B lastly na atay revised present value of estimated restoration cost at December 31, 2020 is 1,953,380 atong i-multiply sa discount rate na 10%. So we have the interest expense in 2020 na 195,338. Journal entry na to, interest expense debit, credit, restoration cost, or asset retirement obligation na 195,338.
Illustration 1. Depreciation of mining equipment. On January 1, 2021, Risland Corporation acquired land containing ore for a total cost of 40 million pesos. Other capitalizable costs incurred for the wasting assets amounted to 20 million pesos. On the same date, mining equipment were also purchased by the company at a total cost of 15 million pesos. Geologists estimate that the total units estimated to be extracted is 4 million tons of ore. It is estimated that 400 tons will be extracted each year during the useful life of the wasted assets. Actual units extracted during 2021 are 450,000 tons. So, case number 1, assuming the equipment are movable and its useful life is 15 years, how much is the depreciation expense in 2021? So, case number 1, movable equipment with useful life longer than the life in the wasting asset. So, mining equipment at cost 15 million pesos. Then, less residual value, by residual value, and mao ni siya 15 million depreciable cost. Ang depreciable cost divide nimo sa useful life of the equipment katong 15 years. 15 million divided by 15 is 1 million. Mao na siya ang depreciation expense in 2021. Is ang case number 2. Assuming the equipment are movable and its useful life is 5 years, how much is the depreciation expense in 2021? So, movable equipment with useful life is shorter than the life of the wasting asset. Mao ra gihapon siya sa case 1. Ang nakalahi ra is 5 years siya. So, mining equipment at cost 15 million. Then, Y residual value, so ang depreciable cost is 15 million gihapon. So, i-divide nimo sa useful life of the equipment nga 5 years. So, 15 million divided by 5 is 3 million. So, muna siya ang depreciation expense in 2021 ang 3 million pesos. So, sa case number 3, assuming the equipment are immovable and its useful life is 15 years, how much is the depreciation expense in 2021? So, sa case number 3 is immovable equipment siya with useful life longer than the life of the wasting asset. Kaya ang case number 1 o case number 2 is mga movable equipment man sila, kaning case number 3 is immovable na. So, sa mining equipment at cost 15 million pesos. Then residual value and the depreciable cost. Then it divides siya sa units estimated to be extracted. So na ay 4 million tons of ore total units estimated to be extracted na mo na siya ang 4 million. Then, i-divide ang 15 million o 4 million, then ang depreciation per unit niya is 3.75. Ang 3.75 mo na siya ang per unit, ang depreciation per unit, then i-multiply na siya sa units extracted during 2021. So, na ay 450,000 units extracted during 2021. So, morning 450,000. So, 3.75 times 450,000 equals, ang depreciation expense is 1,687,500 pesos. Sa life of the wasting asset. So, diba na ay estimated units to be extracted katong 4 million. Then, i-divide siya sa average units to be extracted per year. So, katong dato'y 400,000 tons will be extracted each year during the useful life of the wasting assets. So, mao ni siya ang 400,000. I-divide ni ang 4 million o 400,000 and mao ni ang life of the wasting asset 10 years. Kay diba ang diri asa immovable equipment, if the life of the wasting asset is shorter, the units of output method is often used katong depreciation rate per unit mo ni katong gigamit ni gani. So kay ang sa case 3 is ang iyang case is its useful life is 15 years man. So ang life of the wasting asset is only 10 years. So shorter siya. So mo ni ang gigamit sa immovable. Mo ni ang gigamit sa immovable equipment. Kani. Case number 4, assuming the equipment are immovable and its useful life is 5 years, how much is the depreciation expense in 2021? Sa case number 4, immovable equipment with useful life shorter than the life of the wasting asset. So, sa mining equipment of cost na 15 million, then less residual value bring down 15 million pesos. Depreciable cost siya, and divide mo sa useful life of the equipment na 5 years. Then 15 million divided by 5 is ang depreciation expense in 2021 is 3 million. Parehara siya sa case number 2. Pero siya sa case number 2 kay if mas longer ang wasting asset kay di ba ang wasting asset is 10 years. 10 years din shorter ang case 4. So iyang gamit gyapon yung formula is parehara sa movable equipment. Another example of depreciation of mining equipment. So, illustration 2. During 2020, Antoinette Company acquired and developed property with mineral deposit for 30 million pesos. The property had a residual value of 4 million pesos. In 2020, Antoinette spent 5 million pesos in building on the property. Antoinette does not anticipate that the building will have utility after the mineral deposits are removed. The tonnage mined and estimated remaining tons for years 2020 to 2021 are as follows. So, sa year 2020, na ay 500,000 tons extracted. Then, estimated tons remaining is 1,500,000. Sa 2021 is na ay 800,000 tons extracted. Then, 1,700,000 estimated tons remaining. Required. Number 1, compute for the depreciation to be recognized for 2020. Requirement number 1, so depreciation 2020. Building at cost na ay 5 million pesos. Then, less residual value wala. And mora gyapon ang depreciable cost, 5 million. Then, i-divide by units estimated to be extracted. Kaning 500,000 ang tons extracted, then 1.5 million is ang estimated tons remaining. I-plus mo ang 2 and mao ni ang 2 million. Muna dyan ang units estimated to be extracted. Then, i-divide ang 5 million o ang 2 million, then na ay 2.50. Muna si ang depreciation per unit. Then, ang kaning depreciation per unit, i-multiply siya by tons extracted sa 2020 and mo to 500,000. 500,000 ang tons extracted sa 2020. Then, i-multiply 2.50 times 500,000 and equals to 1,250,000 pesos. Muna siya ang depreciation sa 2020. Sa requirement 2, compute for the depreciation to be recognized for 2021. So requirement number 2, building at cost 5 million. Then less accumulated depreciation katong sa requirement 1, katong sa 2020 nga depreciation ang 1,250,000. Then book value siya sa January 1 ang 5 million minus kaning 1,250,000 and na ay 3,750,000. Less residual value. Why residual value? So bring down 3,750,000 pesos. Then i-divide ang units estimated to be extracted sa 2021. So mo tong 800 plus 1.7 million. Then na ay 2,500,000. 3,750,000 divided by 2,500,000 is 1.50. Mo na ang depreciation per unit. Then i-multiply siya sa tons extracted pag 2021 mo tong 800,000. 1.50 times 800,000 is 1,200,000. Mo na siya ang depreciation pag 2021. Illustration, shutdown. The Salcedo Mining Company constructed a building costing 200,000 pesos on the mine property. Its estimated residual value will not benefit the company and will be ignored for purposes of computing depreciation. The building has an estimated physical life of 10 years. The total estimated recoverable units from the mine is 500 tons. The company's production in the first 4 years of operation was first year na ay 100,000 tons, also sa second year. Then sa third year, shutdown, no output. Fourth year, 100,000 tons. So required, compute for the depreciation expense for the building. So solution, sa first and second years, depreciation niya is katong 280,000 pesos over 500 tons. Ang kaning 500 tons is ang total estimated recoverable units from the mine. Then, ang 280,000 pesos, mo na siya ang building costing. I-times sa 100,000 tons katong sa first year and second years. So 280,000 over 500 tons, then times sa 200,000 tons is 56,000. Knowledge and depreciation sa first and second years. Then sa third year, ang third year kay shutdown, no output man. So ang 280 katong building costing minus sa katong 56 sa first year, then minus ipod sa sa 56 sa second year ni. So minus na sila kani minus na 168,000. Then minusan og 2 years kay katong sa lagi first and second year. So ang 10 years na estimated physical life sa building, minusan og 2 years. So 168,000 over 8 years is equal to 21,000. Then sa fourth year, katong building costing 280,000 minus po sa first year 56,000, then second year 56,000, o ang sa third year nga 21,000. I-minus na sila and na ay 147,000. Then ang kaning 500 is katong 500,000 nga tons is katong estimated recoverable units, diba? Then minus og 200,000. Ang kaning 200 is mauni lagi kani sa katong kaning first year o second year na tons. So maoning 500 nga estimated recoverable units minus sa 200 nga tons sa katong first year and second years. So na ay 300,000 nga tons. I-times sa 100,000 tons sa fourth year. Then, yun mo nang compute na ay 49,000 pesos depreciation sa 4th year.
Liquidating dividends of Chapter 20 Wasting Assets. Under the trust fund doctrine, the capital stock of a corporation is conceived as trust fund of the protection of creditors. So, consequently, dili ko na ma-return ang capital sa stockholders during sa lifetime of the corporation. So, nata exception sa kanang doctrine, ang wasting asset doc. So, under this doctrine, the wasting asset corporation or a company engaged in the extraction of a natural resource. So, kanang legally return sa ang capital to the stockholders during the lifetime of the corporation. We have here the formula, the accumulated profits unappropriated, additional accumulated depletion, and the total. Then subtract capital liquidated in prior years, depletion in ending inventory, nga gikan sa depletion per unit times unit in the ending inventory, and ang total, then the maximum dividends. So we have here an example illustration. Phoebe Company provides the following balances at the end of 2021. Following wasting assets at cost, which is 8 million, accumulated depletion of 7 million, and capital liquidated 1 million, accumulated profits unappropriated 5 million, accumulated profits unappropriated for plant expansion 800, then depletion based on 100 units extracted at 15 pesos per unit, which is 1,500,000. So, gikan ni siya sa 100,000 units times 15 per unit. Kaya diba ang atong formula sa depletion in ending inventory is depletion per unit times units in the ending inventory. So, napoy inventory of resource deposit of 20 units, that is 1 million. So, gipangita nga ni is compute for maximum dividends that can be declared by Phoebe on December 31, 2021. Mani ang solution. So, accumulated profits unappropriated ang 5 million, then accumulated depletion of 7 million. The total is 12 million. So, less capital liquidated, which is 1 million, and depletion and ending inventory kay katong 15 pesos nga extracted sa 100 units, then 20,000 units nasa inventory and resource deposits nga 20,000 units, that will be 300,000. So 10,700,000. Investment property of chapter 21. So investment property is a property, land, or a building, or a part of building, or both, held to earn rentals by the owner or by the lessee under finance lease, to earn rentals, or for capital appreciation, or both. So there are examples of investment property which are stated here in the screen. First is the land held for a long-term capital appreciation, land held for a currently undetermined future use, a building owned by the entity, a building is vacant but is held to be leased out under one or more operating leases, and property that is being constructed or developed for future use as an investment property. So we also have here the investment property that are not included as investment property. So first is intended for sale in the ordinary course of business. Second is owner-occupied property held for future use. Third is property that is leased to another entity under a finance lease. So we have here other classification issues. First is if the portions can be sold or leased out separately. Investment property, those portions of the property that are rented out or for capital appreciation. And owner-occupied property are those portions that are used by the company for administrative purposes. Second is if the portions cannot be sold or leased out separately. In investment property, if the owner-occupied portion is insignificant. And in owner-occupied property is if investment property portion is insignificant. Here in auxiliary services, If the enterprise provides auxiliary services to the occupants of a property held by the enterprise, the appropriateness of classification as investment property is determined by the significance of the services provided. So, in investment property, if those services are relatively insignificant components of the arrangement as a whole, and in owner occupied, where the services asa, services first is investment property. If those services are relatively significant component of the arrangement as a whole. So for instance, the building owner supplies security and maintenance services to the leases. And the second one, owner occupied, where the services provided are more significant, such as in the case of an owner managed hotel, where services provided to guests are significant to the arrangement as a whole. It may be difficult to determine whether auxiliary services are so significant that a property does not qualify as investment property. Um, Judgment is needed to determine whether a property qualifies as investment property, and an investment develops criteria so that it can exercise that judgment consistently in accordance with the definition of investment property. Third one is the intra-company rentals. So it is a property rented to a parent subsidiary or fellow subsidiary is accounted for as follows. So first is the consolidated financial statements. It is an owner-occupied property from the perspective of the group, and separate financial statement is it is accounted as investment property by the lesser of the definition of investment property is met. So we have here an illustration for classification as investment property. The requirement is to identify and compute the amounts to be included in the consolidated financial statement of any company and its subsidiaries. So you can use this as a guide to answer. You can try this to answer. We have here the items and the amounts. So let's try to answer it. So the following items are included as part of investment property. So di ba nalista na to og unsa to ang example sa kanang investment property, di ba? So I will review it. So first is the land held for long-term capital, land held for currently undetermined future use, building owned by the entity, building that is vacant but is held to be leased out under one or more operating leases, and property that's being constructed or developed for future use as investment property. So here we have the farming land was purchased for investment property. So second is a building that is held under mixed use. Only the portion for held to earn rentals is included. So kanang di kay kurni sa 1,720,000 times half, that is or half, or divide 2, that is 860,000. So a building leased to an associate, or a building leased to an associate. So 1,620,000. A building held by the entity under a finance lease and leased out under one or more operating leases, which is 1,100,000. A building owned by a company and being leased out under one or more operating leases, that is 1,300,000, and a building that is being constructed or developed for future use and investment property. So those are the entries for the classification that is classified from this illustration. So the total of it is 6,830,000. So naapod ang katong rest nga kanang entries do not belong to the investment property. We have here the items and the explanation. So first is the factory, which due to a decline in activity is no longer required and is now being held for sale in accordance with PFRS 5. So due to decline in activity and no longer required now, this will be included as non-current asset held for sale under PFRS 5. A factory which is in the process of being constructed on behalf of the government. So this will be under PFRS 15. A building being constructed on behalf of marquee company. This will be under PFRS 15 also. So a new office building which is used by one of its subsidiaries as its head office, which was purchased specifically in the center of Makati City in order to exploit its capital gains potential. So this will be classified as physical plant and equipment. Physical plant and physical plant. Under this will be classified as PPE under PAS 16, PAS 16, since it will be used as a head office. A property that is in the process of construction for sale. So this will be included as inventory under PAS 2 or PAS 2. A property intended for sale in the ordinary course of business. This will be included as inventory under PAS 3. So owner-occupied properties, this will be included, or this will be classified as CPE under PAS 16. So building occupied by employees, the employees pays rent on the building they occupied. This will be classified as CPE under PAS 16 whether or not the employees pay market rent. Also same as number 10. So 11, a building that is leased to a third party under a finance lease. This will be employees pay market rent. Also same as number 10. So 11, a building that is leased to a third party under a finance lease. This will be recognized under PFRS 16. A building that is held under mixed use, so same, kamanda mo same message o parang 1,720,000 times 1/2 is the other half. So the other half is reported as part of PPE under PAS 16. A property where insignificant ancillary services are provided to occupants. This will be PPE under PAS 16 since the ancillary service is significant, di ba? Pinamdam mo nga itong kanang significant or insignificant na classification. Land and building that is leased to a subsidiary shall be reported as CPE in a consolidated financial statement. A new machine that is leased to another associate, a machine will never qualify as investment property since it is not a land or a building. Also same as 17, a machine that is leased under operating lease. So 18 is a building that is being constructed for future use as administration building. So for you to determine what classification the entry are, moto ang guide sa kalutang kanang example of investment property o ang katong dili ma-include sa investment property. Also, we have the other classification issues. So, we have here the initial recognition. Investment property should be recognized as an asset when it is first probable that the future economic benefit of that are associated with the property will flow to the enterprise. Second, the cost of the property can be reliably measured. This is initial measurement. So the cost of an investment property is not increased by startup. Oh, so we have the initial measurement. So investment property is initially measured at cost, including transactions cost. Directly attributable cost includes, for example, a professional fees for legal services, property transfer taxes, and other transaction costs. So, the cost of an investment property is not increased by, first is the startup cost, unless they are necessary to bring the property to the condition necessary for it to be capable of operating in the manner intended by the management. Second is reporting losses incurred before the investment property achieves the planned level of occupancy, or the abnormal amounts of wasted material, labor, or other resources incurred in constructing or developing the property. So, cost of self-constructed investment property. The cost of self-constructed investment property is the total cost incurred to each reporting date or at the date when the construction or development is complete, whichever is earlier. So we have here another example illustration. So cost of self-constructed investment property. The following costs are incurred by Mark Kenneth Company in the construction of its building to be used as investment property. The labor in construction, 1 million. Material used for construction, 1,500,000. Abnormal amount of wasted material, 300,000. Overhead attributed for the construction, 750,000, and other directly attributed costs in construction, that is 350,000. So the requirement for this problem is to compute for the cost of self-constructed investment property. We have here our solution. So first is the labor in construction, 1 million. Material used for construction, 1,500,000. Overhead attributed for the construction is 750,000, and other directly attributed costs in the construction is 350,000. So it is 3,600,000. Diba? It said na the cost of the self-constructed investment property is the total cost incurred at each reporting date or at the date when the construction or development is complete, whichever is earlier.
Good day, everyone. Now let's proceed to investment property held under a finance lease. The initial cost of a property interest held under a finance lease and classified as an investment property shall be recognized at the lower of the fair value of property and present value of minimum lease payments. So, ang ato ko ng initial cost shall be recognized at the lower of fair value and present value of minimum lease payments. And an equivalent amount shall be recognized as liability. Any premium paid for a lease is treated as part of minimum lease payments and is therefore included in the cost of the asset, but is excluded from the liability. If a property interest held under a finance lease is classified as investment property, the item accounted for at fair value is the interest and not the underlying property. So we have here an illustration of investment property held under a finance lease. Alexander Company acquired a building through finance lease. The building is to be rented out under various operating leases. The present value of minimum lease payments is 2,800,000 pesos, while its fair value is 3 million pesos. Required: prepare the necessary entries on the date of recognition of investment property. So, mga itong solution. To record the acquisition of investment property, debit investment property 2,800,000. So anong 2,800,000 man eh? So remember, giingon diri nga ang atong initial cost shall be recognized at the lower of the fair value of the property and present value of minimum lease payments. So sa problem, the present value of minimum lease payments is 2,800,000 and fair value is 3 million. So ang atong kuanon is lower nilang duha. Mo nang 2,800,000 atong gibutang diri. 2,800,000. Then lease liability credit 2,800,000. So nganong 2,800,000 man na. So naka-indicate sa diri nga an equivalent amount shall be recognized as liability. So mo nang atong gibutang diri is 2,800,000 pod. So take note diri nga ang atong cost is makuha nato at the lower of present value of minimum lease payments and fair value of the building. Now, let's proceed to acquisition through non-monetary exchange. When an investment property is acquired through non-monetary exchange, the cost of such an investment is measured using the following order of priority. Number 1, fair value of asset given up plus any cash payment. Number 2, fair value of asset received minus any cash received. Number 3, book value of the asset given up plus any cash payments. So if the acquired asset is not measured at fair value because the exchange transaction lacks commercial substance, or the fair value of the asset received or the asset given up is not reliably measurable, the investment property shall be measured at the carrying amount of the asset given up. So we have here an illustration of investment property acquired through exchange. Cherry's Company acquired a land to be used as investment property through exchange from April Company. The following data are available for the exchange. So these are the following data. Required: prepare the necessary entry on the part of Cherry's Company. So mo-focus rata kang Cherry's. Requirement number 1, assume the exchange has commercial substance, and number 2, assume the exchange has no commercial substance. So let's first start with requirement number 1. To record the acquisition of the investment property new cost, debit 1,350,000. So giun sa man nato pagkuha 1,350,000. So ato ning gi-follow fair value of asset given up plus any cash payment. So we have fair value of investment property given 1,200,000 and cash payment of 150,000. Then ato nang i-add, then we have 1,350,000. Then investment property old cost credit 1 million dire gikan ni dire. Then cash nga 150 kani. Then gain on exchange nga 200,000. So giunsa man ni nato pagkuha ang 200,000. So sa pag-compute sa gain on exchange atong i-subtract ang fair value and carrying amount. So we have fair value of 1,200,000, then carrying amount of 1 million. Then minus nato, we have gain on exchange profit 200,000 pesos. Next, requirement number 2, assume the exchange has no commercial substance. So mo ni ang solution sa requirement number 2, to record the acquisition of the investment property. So investment property new cost is 1,150,000. So yun sa manin nato pagkuha. So remember giingon diri nga if the exchange transaction lacks commercial substance, the investment property shall be measured at carrying amount of asset given up. So atong kuhaon ang carrying amount of investment property given, we have 1 million and then cash payment nga 150,000. Then ato silang i-add 1 million plus 150,000, then we have 1,150,000. Then credit investment property old cost 1 million and then cash 150,000. Then take note that if the transaction lacks commercial substance, what na tay gain or loss on exchange. Next is the subsequent measurement. So subsequently, we measure investment property using two models. So we are being permitted to choose between the fair value model and then the cost model. So ato ra nang i-explain sila unja. One method must be adopted for all of an entity's investment property. So take note nga one method ra ang atong i-adopt sa tanan. So if you have 3 investment properties, dili pwede nga ang usa naka cost model ja ang duha naka fair value model. So dapat consistent silang tanan. Voluntary change in accounting policy shall be made only if the change will result in a more appropriate presentation of transaction. Pwede kuno nato ma-change from cost to fair value or fair value to cost model kung sa tanaw sa company that it will be a more appropriate presentation for the investment property. However, there is a mention in past 40 that it is highly unlikely daw that the entity will change from a fair value model to a cost model because kung mag fair value model ganita, dapat kutob na siya disposal. So maong lisod mag-change from fair value model to cost model. Now let's discuss the two models. So first model is the cost model. So cost model is very similar to past 16, which is the cost less accumulated depreciation less accumulated impairment losses, if any. And then you have the other choice, which is the fair value model. Under the fair value model, we recognize or we measure subsequently the investment property at fair value. Take note, wala na tayo depreciation and impairment na mahitabo. You just measure it at fair value. Also, any gain or loss from changes in fair value shall be recognized in profit or loss. And if an entity has previously measured an investment property at fair value, it should continue to be measured at fair value until disposal, even if comparable market transactions become less frequent or market prices become less readily available. So like I said kanina nga, kung ang asset gi-measure siya at fair value subsequently, or kung nigamit na kag fair value model, dapat fair value model na jud imong gamiton until disposal. So para to adhere principle of consistency. So let's have some example. On January 1, 2019, Bernard Co. purchased building at a cost of 3 million pesos. On the same date, the building was leased out under an operating lease. The company's policy regarding depreciable asset is to be depreciated using straight-line method of depreciation over an estimated useful life of 20 years. The fair value of the building from December 31, 2019 to 2021 is as follows. Required, what is the carrying amount of the land and building from December 31, 2019 to 2021, assuming the company uses number 1, cost model, number 2, fair value model. So let's start with the cost model. So again, using the cost model, the investment property or the building is measured at cost less accumulated depreciation and impairment loss, if any. The carrying amount of the building are computed as follows. Investment property initial cost is 3 million. So, gikan ni diri, cost 3 million. Less accumulated depreciation nga 150. So, this ani gikan ang 150. So, sa pagkuha sa depreciation, atong i-divide ang cost and the useful lives. So, we have cost 3 million, then divided by 20 years. Okay. So, we got 150,000. Then, 3 million minus 150,000, we have a carrying amount of 2,850,000 in 2019. Then, 2020, same process. Investment property cost 3 million less accumulated depreciation 300,000. So na 300,000 si kay from January 1, 2019 to December 31, 2020. So times 2 years. We have 300,000. So 3 million minus 300,000, we have carrying amount of 2,700,000 in 2020. Then 2021, investment property cost 3 million less accumulated depreciation 450 times na to 3 years. Then minus 3 million minus 450,000, we have 2,550,000 nga carrying amount in 2021. And take note that fair value changes are not recognized under the cost model. Next, ari na sad ta sa fair value model. So using the fair value model, the investment property is measured at fair value at the end of each reporting period, and the building should not be depreciated. The carrying amount of the investment property would be as follows. Again, our initial cost is 3 million. So during December 31, 2019, our fair value is 3,100,000. So from 3 million ay mag 3.1, then we have a gain of 100,000. Then pag December 31, 2020, our fair value na himong 2,450,000. So from 3.1 million na himong 2,450,000, then we have a loss of 650,000. Then pag December 31, 2021, our fair value na himong 2,990,000. Then we have a gain of 540,000. So take note that under the fair value model, depreciation charges are not recognized. Now let's move on to transfers from or to investment property. Transfers to or from investment property should only be made when there is a change in use. So when can we say that there is a change in use? So first, commencement of owner occupation for a transfer from investment property to owner-occupied property. So kung sa una, ijang giparentahan, investment property. Pero karon gigamit na niya as office building, then owner-occupation property na siya. The next, commencement of development with a view to sale for a transfer from investment property to inventories. So kung gidevelop na siya, ang investment property sa una gidevelop para ibalik dya, kailangan nimo i-transfer from investment property to inventory because imong purpose is to sell. The next, end of owner occupation for a transfer from owner-occupied property to investment property. So, humana gigamit sa owner. For a transfer from owner-occupied property to investment property. So, for example, sa una, gi-occupy sa owner as office, dya karon giparentahan as third party. So, that is owner-occupied property to investment property. The next, commencement of an operating lease to another party for a transfer from inventory to investment property. So, for example, sa una, imong gibaligya, pero may gusto mo palit, so ang imong gibuhat, imo na namang giparentahan. So, inventory to investment property. Now, what about selling? When an entity decides to dispose or to sell an investment property without development, it continues to treat the property as an investment property until it is derecognized and does not treat it as inventory. So remember that inventories are being sold at normal business operation in which that is their source of revenue. So kung dili na mao ang purpose and ang purpose ra nimo is merely to sell the investment property itself, then it will not be reclassified until it is derecognized. Next, accounting for transfers. Transfers to and from investment property cost model. When an entity uses the cost model, transfers between investment property, owner-occupied property, and inventories do not change the carrying amount of the property transferred, and they do not change the cost of that property for measurement or disclosure purposes. So, kung cost model ang gigamit nimo sa imong investment property, bisan imo nang i-transfer as PPE or as an inventory, the cost of that said property will remain and it will not change. Now, let's have an example of transfer from PPE to investment property. On January 1, 2019, Marie Company bought a land and building from Antoinette Company for 3,500,000. Marie Company will use the building as its head office. The portion of the total purchase price attributable to the land is 1.7 million, while the balance is attributable to the building. The company depreciates the building using straight-line method over an estimated useful life of 25 years. The company depreciates the building using straight-line method over an estimated useful life of 25 years. The company uses cost model in measuring its property, plant, and equipment subsequent to initial measurement. On December 1, 2021, the company has acquired another land and building in the Central Business District to be used as their new head office, as this would be a great location. The management decided to lease the old building under operating lease. By the end of 2021, the old building was already vacated by Marie Company, and another company has already occupied the old building. The fair value of land and building at the end of 2021 was 3,400,000. Required account for the transfer of the PPA to investment property. So, mo ni atong solution. So, since property, plant, and equipment is accounted using the cost model, the transfer will be based on carrying amount on the date of transfer. Hence, the fair value of the date of transfer is ignored and no gain or loss on transfer will be recognized. So, the new cost of investment property on December 31, 2021 is computed as follow. So, land credit, 1,700,000. So, dire. Then, building cost, 1,800,000. So, nakuha ni nato by subtracting the 3.5 minus 1.7 million, we have 1,800,000. Less accumulated depreciation nga 216,000. So, nakuha na to ang depreciation, again, cost sa building, which is 1.8 million, divided by useful life, 25 years, then times 3 years. So, from January 1, 2019 to December 31, 2021. So, 3 years equals 216,000. Then, ato ni minus 1.8 million minus 216,000, we have 1,584,000. Then, ato i-add 1.7 million plus 1,584,000. Then, we have the new cost of investment property, 3,284,000. So, take note that depreciation was recorded first before transferring the carrying amount of the PPA to investment property. Then, this is the journal entry on December 31, 2021. So, to account for the PPA using PAS 16 before the transfer to investment property, depreciation expense, debit 72,000. So, nakuha ni nato atong i-divide ang cost sa building, which is 1.8 million divided by 25 years, the useful life. So, we have 72,000. Credit accumulated depreciation, 72,000. To transfer the PPA to investment property, debit 3,284,000, accumulated depreciation, debit 216,000, land credit 1.7 million, and building credit 1.8 million.
Transfer from PPE to investment property fair value model. If an owner-occupied property becomes an investment property, will be carried at fair value. An entity shall apply PAS 16 for owned property and PFRS 16 for property held by lease as right of use asset up to the date of change in use. So, for a transfer from inventories to investment property, this refers to reclassification of certain assets from inventories to investment where ang asset are measured sa fair value. Illustration for transfer from PPE to investment property using fair value model. On December 31, 2021, Janice Company reclassified its previously held asset as owner-occupied to investment in property due to change in use. The following data were determined by Janice Company. Original cost, 5 million. Accumulated depreciation on December 31, 2021, 1,800,000. Carrying amount had no impairment loss recognized on December 31, 2021, 3,500,000. And fair value on December 31, 2021, 3,850,000. Since the fair value of the asset can be determined at the end of each reporting period, Janice Company's policy is to use the revaluation model in each item of PPE subsequent to initial measurement. Janice Company also used the straight-line method of depreciation and depreciates PPE using estimated useful life of 20 years. Required. Account for the transfer of the PPE to investment property. So, solution. Since the transfer is to be made at fair value, the PPE first should be accounted under PAS 16 up to the date of transfer. Therefore, the increase in fair value of 650,000 nga nakuha sa pagminus sa fair value o sa carrying amount and should be treated as follows. Letter A. First, 300,000 pesos accounted as a reversal of impairment loss in the P&L. B. Excess of 350,000 accounted as revaluation surplus. Then the journal entry related to the transfer would be as follow. Number 1, to account for the PPE using PAS 16 before the transfer to investment, the entry would be debit on accumulated depreciation for 650,000 pesos, credit on reversal of impairment loss P&L for 300,000 pesos, and revaluation surplus for 350,000 pesos. Number 2, to transfer the PPE to investment property. So, ang investment property is 3,850,000 pesos mana i-debit in accumulated depreciation nga 1,150,000 nga nakuha sa pag-minus sa accumulated depreciation o sa fair value na minus dya tungod kay kung mag-transfer og asset from PPE to investment property. Then ang property, plant and equipment is 5 million credit. Next is transfer from inventories to investment property, fair value model. For a transfer from inventories to investment property that will be carried at fair value, any difference between the fair value of the property at the date and its previous carrying amount shall be recognized in profit or loss. The treatment of transfer from inventories to investment property that will be carried at fair value is consistent with the treatment of sales of inventories. Illustration for transfer from inventories to investment property. On January 1, 2019, Annalyn Company bought a piece of land worth 2,600,000 pesos. The company is engaged in buy and sell of land. On February 14, 2021, the company leased the land under an operating lease to another company. The estimated selling price and cost to sell of the inventories for the past 2 years is as follows. For December 31, 2019, the selling price is 2,650,000 pesos and cost to sell for 150,000 pesos. On sa December 31, 2020, selling price is 2,750,000 pesos and cost to sell for 120,000 pesos. Required. Account for the inventory and its transfer to investment property. So, ang solution is, since the company is engaged in buy and sell of land, the land is classified as inventories and to be accounted using PAS 2 inventories. PAS 2 requires that ang inventories need to be measured at lower cost or net realizable value subsequent to initial measurement. Number 1, the land will be written down to its realizable value of 2,500,000 pesos. So, nakuha ni siya sa pag-deduct na to sa selling price and cost to sell pag December 31, 2019. Then, ang loss will be recognized amounting to 100,000 pesos na laman tungod kay magikwaan naman ang land worth o ang realizable value nga 2,500,000 pesos. So, the entry would be debit on loss on inventory write-down 100,000 pesos, then credit on merchandise inventory for 100,000 pesos. Number 2, on December 31, 2020, the new carrying amount of the inventory will be 2,600,000 pesos. PAS 2 paragraph 33 provides that reversal of write-down of inventories will be limited to write-down recognized in prior periods. Therefore, only ang 100,000 pesos is recognized as reversal of inventory write-down as a deduction to amount of the inventory's expense, that is, cost of goods sold. So, the entry would be merchandise inventory for 100,000 pesos, debit, then credit of cost of goods sold for 100,000 pesos. Number 3, on February 14, 2021, the date of transfer, the new cost of the investment property is the fair value of 2,880,000 pesos on the date of transfer. The difference between the fair value of 2,880,000 pesos and the previous carrying amount of 2,600,000 pesos will be recognized in the profit or loss as gain on transfer. And to entry number 3, debit on investment property at fair value for 2,880,000 pesos, gain on transfer P&L 180,000 pesos nga nakuha sa pag-minus sa fair value ug sa previous nga carrying amount. Then merchandise inventory credit for 2,600,000. Completion of self-constructed or developed investment property. When an entity completes the construction or development of a self-constructed investment property that will be carried at fair value, any difference between the fair value of the property at the date and its previous carrying amount shall be recognized in profit or loss. Illustration for self-constructed investment property. On January 1, 2021, Raven Corporation started construction of a building to be rented out under an operating lease after the building was completed. The total cost incurred by Raven Corporation, which includes materials, labor, and overhead, totaled 5,200,000 pesos. On December 31, 2021, when the building was completed, the fair value of the building was determined to be 5 million. Required. How should the investment property be measured at December 31, 2021? First, the solution. On December 31, 2021, the investment of property should be measured at sa inyong fair value nga 5 million pesos. Then the difference of the fair value and the construction cost of 200,000 pesos are recognized in profit or loss. The journal entry to record above would be debit for investment property at fair value for 5 million pesos, loss on measurement na 200,000 pesos, then construction in progress investment property credit for 5,200,000 pesos. Derecognition. Derecognition is an investment property that should be derecognized when the investment property is disposed, permanently withdrawn from use or retired, and no future economic benefits are expected from its disposal. Illustration for derecognition of investment property. On June 30, 2021, May Company sold its investment property for 5 million pesos. The company paid 200,000 pesos as a transaction cost. The investment property was acquired 4 years ago at a cost of 6 million pesos. Its estimated useful life was 10 years. Required. Number 1. Compute for the gain or loss on the recognition assuming the company. Required 1A. Cost model. Required 1B. Fair value model assuming the fair value on December 31, 2021 was 5,200,000 pesos. Number 2. Required. For each case, prepare all the necessary entries. Requirement number 1A. Cost model. Consideration received for 6 million pesos nga man ang amount na gi-invest. Then last transaction cost for 200,000 pesos. I-minus na to siya para makuha na to ang net selling price na 5,800,000 pesos. Then sa less carrying amount cost for 6 million pesos. Then less accumulated depreciation nga nakuha sa pag-divide sa 6 million o sa 10 kay 10 years man ang diyang useful life times 4 kay 4 years ago man is siya na acquired. Then i-total, i-minus mo na makuha na nato ang 3,600,000 pesos. Ug para makuha na to ang gain on the recognition P&L, i-minus na to si net selling price na 5,800,000 pesos minus less accumulated depreciation nga 3,600,000 pesos for total of 2,200,000 pesos. Requirement number 2A cost model. The journal entry would be cash debit 5,800,000 pesos, debit accumulated depreciation 2,400,000 pesos, then credit on investment property for 6 million pesos, then gain on the recognition P&L 2,200,000 pesos. Makuha ra ni siya masunod rin si Jack kung makuha na to ang requirement number 1. Requirement number 1B, fair value model. Consideration received is 6 million pesos. Then, atong last transaction ganina nga 200,000 pesos over to. Next is the requirement number 1B, fair value model. Consideration received for 6 million pesos, then less transaction cost for 200,000 pesos, total for net selling price na 5,800,000. Next is requirement number 1B, fair value model. Consideration received for 6 million pesos, then less transaction cost for 200,000 pesos equals net selling price na 5,800,000 pesos. Then for less carrying amount na 5,200,000 pesos, i-deduct na po nito si Ja para makuha ang gain on the recognition P&L na 600,000 pesos. Last is the requirement number 2B, fair value. For the journal entry would be debit cash for 5,800,000 pesos, then credit on investment property for 5,200,000 pesos.